My name is Huang Kangmiao. Our group is trying to analyze two companies, Alibaba and Amazon. There are four parts in our presentation. We have some financial analysis and stock analysis to compare these two companies. And finally, there have some suggestions for Alibaba. And for the introduction, Alibaba and Amazon are the largest digital business empires in China and the United States. Both companies have established strong brand images in their home markets, focusing on e-commerce business, supplemented by the cloud services and digital media. Both companies are listed in the United States. At present, the two technology giants are approaching saturation in their home markets and are looking for new markets to expand competition. Although the two companies may look similar, they are completely different from business model and market situation. And the picture is about top 10 internet companies by global market value in 2019. We can see that Amazon is still the number one. As the e-commerce giant of the China and the United States, Amazon and Ali have always focused on low prices, huge categories, and extreme logistics as the core. Constantly attracting traffic, thereby promoting the expansion of e-commerce retail business. And then from the next picture, we can clearly see that Amazon keep increasing and finally surpassed Google from 2018. And then for the chapter 2, the financial analysis is talking about the financial growth and health. While Amazon has bigger market cap of $730 billion, Alibaba stands out to be more profitable compared to Amazon with operating margin of 28%. Amazon has bigger global presence while Alibaba has better hold to China, which is one of the biggest growing economics in the world. And Amazon went public in 1997 and its share price has grown more than 1,000 times in 20 years. On September the 4th, 2018, Amazon's share price peaked at $2,050.5 per share, with a market value of more than $1 trillion, becoming another U.S. company with a market value of more than $1 trillion after Apple. Alibaba has listed on the New York Stock Exchange in 2014 with an issue price of $90.5 per share, up 91.6% in 5 years, and its current market value is more than $400 billion. Since Alibaba went public in 2014, Amazon and Alibaba have generally gone through 3 stages. For the first period is Ali's leading period. Ali's core e-commerce business expanded rapidly with the huge e-commerce market in China. Alibaba once surpassed Amazon in the initial market value, and for the autumn period is evenly divided. Ali and Amazon have similarly market values, and their respective businesses are developing in a balanced manner. Amazon's market value is slightly ahead of Alibaba. And the third period, Amazon emerged from the crowd, and the performance of the secondary market significantly surpassed Alibaba. Amazon's market value reached $1 trillion, while Alibaba maintained at about $500 billion.
Okay, I will do the stock analysis. We use Python to fetch the 2017 to 2019 2 years data of Amazon and Alibaba, which contains stock value, volume, and so on. Then we do our analysis of visualization and compare them. Amazon and Alibaba are both listed in U.S. stock market, but they are in different exchanges. Amazon is in Nasdaq and Alibaba is in New York Stock Exchange, so the two companies differ greatly in stock value, but the overall trend is still meaningful. There are the split adjusted close value of Amazon and Alibaba during this period. We can see the close value of the two companies was moderately rising, but overall it has soared. The trend continued to July 2018. As for Amazon, its stock value began an increasing rise in 2017. The stock value of these two companies began to decline from October and July 2018, and the tendency to swing violently continued to January 2019. The trading volume for both Amazon and Alibaba are also very useful. When we analyze the closing price and the trading volume, we can find that the trading volume of Amazon and Alibaba both showed an increasing trend during this period. So, although there are some fluctuation, so their closing price are also gradually rising. And when the company trading volume increase or decrease by a large amount, its stock price will also change greatly. These two pictures introduce the moving average. Moving average is a method of statistical analysis that averages securities price over a certain period of time and connects the average values at different times to formal and moving average, which is used to observe changes in securities price. This is a technical indicator of trends. At the same time, it has the effect of smoothing short-term fluctuations. So when we compare the moving average of Amazon and Alibaba with the Nasdaq, we can see the timing of the transaction. This is an investment analysis method to help investors do some invest. A rate of return is a net gain or loss on an investment over a specific time period, expressed as a percentage of the investment initial cost. From the figure, we can see the overall trend of return value to the two companies were both decreased during this period, although there are some fluctuation in some months. We can clearly see that the returns of the two stocks are consistent with the changing trend of the Nasdaq index. The cumulative return value is similar, but the return of Alibaba has a large fluctuation, so Amazon has more investment value. The Sharpe ratio calculates the exercise return per unit of total risk. I also put the Sharpe ratio formula on the PPT, and we can see clearly that the greater the volatility, the higher the risk. Therefore, the higher the Sharpe ratio, the better. As can be seen from the figure, Amazon must be the first choice for investment, followed by Apple and Google. This is a good indicator for investment to invest in the market.
Hello, I'm Calvin. I'm going to introduce the correlation analysis in Python. It can help investors who are interested in IT stock to analyze the whole IT industry performance and build their IT stock portfolio. First, we transform daily price data for those top 6 IT company stock into percentage daily trend, including Apple, Alibaba, Amazon, Baidu, Google, and NetEase. Percentage trend or return rate will find how much the price trend compared to the previous day. Then we plot the image like this. In this scatter graph, each point corresponds to the daily return for Alibaba and Amazon daily return at a specific date. If those data points are more closer to the red line, which represent perfect positive correlation between two variables, y equal to s, the more possible Alibaba stock and Amazon stock show a positive correlation. You can see here that there is slightly positive correlation among Alibaba return and Amazon return. It seems like that the higher the Alibaba return, the higher Amazon return for most situations. And the two histogram on the top and on the right hand side is normal distribution of the daily return. Knowing the correlation will help us see whether one stock return will affected by the other. We also can find out those 6 stock correlation between each other by Python seaborn function. The pair plot will give us such scatter graph matrix. In order to get the specific number of the correlation, we need a correlation table between them, the 6 IT stock. Control the correlation of different stocks in investor portfolio is a very effective way to avoid huge loss when the market is unstable or during IT industry recession period. For example, if Google's stock price decreased by 20% last week, it is likely that the Amazon stock will also decrease around 30% because correlation between them is quite high, 0.64. However, Google stock did not affect significantly Baidu stock because only 0.37 correlation between them. So investor can avoid some loss by holding more Baidu stock rather than Amazon stock. But if some information indicate that the IT market is bullish in the future rather than bearish, investor can earn more money by holding more stock with high positive correlation. So the correlation and the analysis in Python is helpful for investment. This is all for my part. Thank you. Let me pass the next part to my groupmate.
Hello everyone, there is Zhang Yuting. I'll introduce the comparison of Amazon and Alibaba. There is an interesting phenomenon. The operating income of Amazon is more than Alibaba, but the profitability of Ali is better. It reflects the different operation model of these two companies. First, Amazon is highly globalized. The total revenue of international business accounts for more than 26%, Alibaba accounting for only 7% of its total revenue. Second, Amazon pays more attention on innovative research and development. In recent years, Amazon's research and development capital ranks first among all major enterprises in the world. Amazon has always insisted on using 20% of its revenue for innovative research and development, which means Amazon is more innovative. If Amazon decreased half of research costs, their net profit would be larger than Alibaba. Third, cloud service play an important role in Amazon. Amazon's cloud service can surpass Google, Microsoft, and other giants. Alibaba and Tencent, China's leading cloud service provider, has less than half of Amazon's cloud service capacity. So what conclusion can we get? At present, the market value of Alibaba is $467 billion, and the market value of Amazon is $879 billion. Amazon's market value is almost $400 billion more than Alibaba. It is very difficult to surpass it in the short time. Although Amazon cloud computing business revenue only accounts for about 10% of its total revenue, but net profit accounts for 57% of total profit, which means that more than half of Amazon's net profit comes from cloud computing business. Most of Alibaba's net profit comes from its core e-commerce business. Neither Alibaba Cloud nor Grand Entertainment has achieved profit, and it is still losing money. So there is two advice for Alibaba. First, increase value-added services and the number of paying customers. The main driver of Alibaba Cloud's current growth comes from the expansion of the user group. Although Alibaba Cloud currently has 8 data center regions and 10 international data center regions in China, and more than 1 million paying customers worldwide, Alibaba Cloud's current paying customers are still mainly small and medium customers. So continue to increase the number of paying customers is still the primary consideration. Second, continue to invest in research and development of applied technology and products in the long run to create a cloud platform that meets users' needs. What Alibaba can do is to increase the launch of cloud products, promote the optimization of Aliyun's function and technological progress, use technical to expand business boundaries, and use business to promote technology development. These are our group job. Thank you.